The global economic landscape is undergoing a seismic transformation as the United States and China engage in an escalating trade conflict marked by tariffs, strategic countermeasures, and a deepening geopolitical rivalry. At the heart of this clash is a 10% tariff imposed by the U.S. on all Chinese imports, a $560 billion economic maneuver aimed at protecting domestic industries, reducing the U.S.-China trade deficit, and pressuring Beijing to reform its economic policies. While the immediate goal is to bolster American competitiveness, the long-term consequences of this policy, and China's calculated response, are reshaping global trade, supply chains, and geopolitical alliances. The U.S. tariff strategy. The Biden administration's tariff hike reflects a broader strategy to revive U.S. manufacturing and reduce dependency on Chinese goods. By making imported Chinese products more expensive, the policy seeks to incentivize domestic production in sectors like semiconductors, electric vehicles, and clean energy. However, economists warn that such tariffs function as a double-edged sword. While they may curb Chinese exports, they also raise costs for American consumers and businesses reliant on Chinese imports. For example, tariffs on lithium-ion batteries and solar panels, critical for the U.S. green transition, could increase clean energy costs by 15%, undermining climate goals. Households already strained by inflation may face an additional $1,200 in annual expenses, disproportionately impacting low and middle-income families. China's preparedness. A 5-year counter-strategy. Contrary to perceptions of a reactive stance, China has spent years preparing for this escalation. Since 2019, Beijing has methodically developed a multi-pronged strategy to insulate its economy and retaliate against U.S. measures. The Unreliable Entity List. China's blacklist targets U.S. firms deemed threats to national interests. Companies like PVH, parent of Calvin Klein, and Tommy Hilfiger face severe restrictions, disrupting their supply chains and market access. This tactic pressures multinational corporations to reconsider their reliance on Chinese manufacturing or risk operational paralysis. Export controls on critical materials. China dominates the global supply of gallium and germanium, metals essential for semiconductors, military tech, and EVs. By restricting exports, Beijing aims to slow U.S. advancements in high-tech industries, leveraging its monopoly to exert geopolitical influence. Retaliatory tariffs. China has strategically imposed tariffs on U.S. sectors where it holds leverage, including soybeans, liquefied natural gas, LNG, and automobiles. These measures aim to inflict economic pain on politically sensitive industries, forcing U.S. policymakers to weigh the costs of continued escalation. Decoupling from U.S. The most consequential shift is China's deliberate decoupling from a U.S.-led global economy. Beijing is reducing reliance on American markets and suppliers by diversifying energy imports, cutting U.S. LNG imports by 60% over 5 years and securing alternatives from Russia and Kazakhstan. Forging new trade alliances. A delegation of 32 major Chinese corporations recently expanded partnerships in Southeast Asia, the Middle East, and Africa, building a trade network that sidelines the U.S. Tech sector retaliation. Launching antitrust probes into U.S. tech giants like Google, signaling a willingness to weaponize regulatory power in the broader tech war. This decoupling threatens to fragment the global economy into competing blocs, with the U.S. and China leading separate spheres of influence. Changing global supply chains. Multinational corporations face unprecedented challenges. Companies like Apple and Boeing, deeply embedded in Chinese supply chains or reliant on its consumer market, must navigate escalating risks. Apple's potential shift of iPhone production to India and Vietnam highlights the logistical and financial hurdles of diversifying supply chains, a process that could cost $1 trillion globally by 2030. Similarly, Boeing risks losing billions in Chinese jet orders, threatening U.S. jobs and industrial stability. Smaller businesses, however, bear the brunt of tariffs. Rising input costs and shrinking profit margins force many to choose between price hikes, layoffs, or closure, a reality already evident in sectors like retail and manufacturing. Unintended consequences: climate goals and global cooperation. Paradoxically, tariffs designed to protect U.S. industries may hinder progress on shared global challenges. By raising costs for renewable energy components, the U.S. risks delaying its clean energy transition. Meanwhile, collaboration on climate initiatives has plummeted, with joint U.S.-China green tech projects declining by 72% since 2020. This lack of cooperation undermines efforts to combat climate change, pandemics, and technological risks, issues requiring multilateral solutions. Geopolitical realignment. The trade war is a microcosm of a broader geopolitical contest. China's alliances with Russia, energy, Saudi Arabia, infrastructure, and BRICS plus nations, trade, challenge the U.S.-led order. Southeast Asian and African countries, pressured to choose sides, increasingly adopt hedging strategies to avoid economic collateral damage. The rise of technological nationalism exacerbates this divide. Competing tech standards, 5G networks, and AI ecosystems threaten to splinter the internet and stifle innovation. A world where consumers choose between American or Chinese tech platforms is no longer hypothetical. It is a looming reality. Conclusion: the U.S.-China trade war marks a pivotal moment in economic history. What began as a dispute over tariffs has evolved into a struggle for technological supremacy, global influence, and the future of globalization itself. While decoupling may offer short-term strategic advantages, its long-term costs, economic fragmentation, slowed innovation, and weakened global governance, pose existential risks. The path forward demands nuanced diplomacy, renewed multilateral engagement, and frameworks to manage competition without severing interdependence. For policymakers, businesses, and citizens, understanding this complex rivalry is not optional. It is essential to navigating the uncertainties of a rapidly changing world. As the U.S. and China redefine their roles, the choices made today will shape the global economy for decades to come.